Hi, this is Nilus Mattive for Money and Markets TV. I spent last week on a family vacation to the Outer Banks of North Carolina, and judging from the beating stocks took on Wall Street, it might have been a good week to stay away. And many investors apparently feel just that way. But I actually don't view this major sell-off as a time to unload positions. Instead, I'm viewing it as an opportunity to continue putting money to work. In order to explain this philosophy, I have to tell you about what I saw in North Carolina. First-hand evidence that we are about to enter a double-dip recession for the first time in nearly 3 decades. For starters, the roads on the drive down were virtually empty. On the Outer Banks, it was a similar story. Far less foot traffic at stores than usual, and short waits at restaurants. And everywhere I looked, for sale signs on vacation properties, and real estate offices offering short sales and foreclosed properties. I do think some real estate could be attractive from a cash flow perspective these days. And the same can be said for all tangible assets, because they have real economic value and also produce safe, reliable income. Plus, they offer built-in inflation protection. After all, if the Fed starts printing even more money to resuscitate the economy yet again, the values of companies, properties, and other income-producing assets will naturally rise alongside metals and other commodities. But if a renewed slowdown creates a long period of weaker prices, you will still continue to receive steady payments along the way. It should be obvious by now that I'm not one of those people who recommends selling into market weakness. Instead, I prefer to do the selling when there are profits to be taken, and the buying when everyone else is panicked, like they are now. But in order to buy in times like these, you need to have a large portion of cash available in your investment portfolio. This is what I've been recommending to my subscribers. And in fact, my two main portfolios contain a 27% and a 56% allocation to cash. And this approach is what's allowing me to look for bargains in the market right now. I'm finding those bargains in some of my favorite dividend-paying stocks. Remember, as prices drop, their yields naturally go up. But more importantly, most of them operate in recession-resistant sectors and industries. As I've been pointing out for some time, the very best corners of the stock market during times of economic weakness are utilities, healthcare, and consumer staples companies, both because they are rich with dividends and also because their businesses are largely insulated from slowdowns. So it should come as no surprise that the lion's share of recommendations in my Income Superstars service have been in these sectors, including some firms that either boast large overseas businesses or that are actually based overseas themselves. In fact, my dad's income portfolio currently contains 9 stocks, 8 of which are pure plays on the 3 sectors I just mentioned, and all of them pay very healthy dividends. This is precisely why I was able to relax on my vacation, even as the market tanked, and why now that I'm back at the office, I'm most excited by the prospect of finding new ways to put money to work. So please, despite all the dismal news and negativity out there right now, always try to stay focused on the longer term. And remember that, like the Outer Banks, America's best companies have survived countless storms over the last century and will continue to do so for decades to come. For Money and Markets TV, I'm Nilus Mattive. Thanks for watching.